So is this what pops into your head when you think of entering this crazy housing market as a first-time home buyer? Well, you have to learn how to walk before you can learn how to run, and we are going to help you out today by teaching you some home buying basics. I'm Caroline Reed with The Real Deal, the place where we give you the confidence and the clarity that you need to make the right real estate decisions for you. And today we're going to go through some home buying basics because before you jump into that crazy market, there are some things that you need to know. You've probably picked out a whole bunch of dream houses online already, and you're about to jump in that car and go, look, but I need you to stop. Right there. There are some questions that you need to ask yourself first before you jump headlong into this home buying process. First, do you have enough money? Do you have enough money in your savings for the closing costs and the down payment and the cost of owning a home? Because you know as soon as you move in, the washing machine's going to break down. Secondly, have you taken a look at your spending habits? Do you have enough money to cover that mortgage payment, cover all of the necessary payments you have during the month, and account for some extra for emergencies and things that just pop up in everyday life so you don't have to dip into whatever savings that you have left over? And your credit. Have you pulled your credit lately? Do you know what your credit score is? Is it high enough to score you some of the choice interest rates that banks are offering these days? Or does it have a couple of dings on it that maybe you want to take a couple months to get those all straightened out before you dive headlong into this market? Next, ask yourself about your wants versus your needs. Do you want a condo, a townhome, single family home? What city should it be in? How big should it be? Do you want a 2-car garage or a 3-car garage? Figure out on 2 lists the things that you need to have and the things that you want to have. So as you go house hunting, you can check that needs list and make sure that those houses are meeting everything on the list. And hopefully they'll meet most of what's on your wants list as well. The next question is, how much money can you spend? Go get yourself pre-qualified. Go find a lender that you like and that works with you well and have that lender pre-qualify you. They are going to pull your credit, and just based on what you tell them that you make in a month, they're going to tell you about how much you can afford. Now, in that mix is something called the debt to income ratio. It's not just about how much you make. It's also about how much you spend. The debt to income ratio is money coming in versus money going out. The bank is going to take a look at that as well to make sure that you are within their ratio limits. The front end DTI, which is without living expenses, is 28%. The back end DPI, which is with your housing expenses, is anywhere from 36 to 43, depending on the lender and the loan. And remember, the bank doesn't look at your electric bill or your gas bill. They look at recurring payments like credit cards, student loans, and car payments. So if you are about to finish up one of those loans, it's not a bad idea to go ahead and do that, get that paid off before you start your home search. And when you're out there shopping for this lender, keep in mind that there are mortgage brokers and there are bankers. 2 different things. Bankers are just regular banks, Wells Fargo, US Bank, whatever, and they will offer you the products that that bank offers. Mortgage brokers, on the other hand, can shop many different lenders and get the best deal for you. Now, if you want a more detailed explanation of the difference between the two, I will put a link in the description below to a video that explains that a little bit more in depth. The next thing you have to decide is who's going to help you. Can you go out and do this all by yourself? Yes, you certainly can. I would advise that you do some serious homework before you do that because there is a lot involved in the purchase of a house. So finding a real estate agent usually is your best bet. And you can go out to family and friends, ask for their recommendations. Usually somebody in your circle of friends will have just moved and they can tell you whether they like their realtor or not. Or you can go on to sites like Zillow and Trulia and look at the agents they have on their sites and look at ratings and recommendations there. At this point, it's time to go out and get pre-approved. Before, we got pre-qualified. That's kind of like dating. Pre-approved is more like you're engaged. You can still back out if you want to, but you know each other a whole lot better now. That lender that you have chosen is going to ask you for all kinds of documentation to prove the things that you told them before, like how much money that you make. So they're going to ask for a whole bunch of documents. They're probably going to pull your credit again, so that when you find that dream house and are ready to pull the trigger, they will be right there and ready with you. And when you're in there talking to that lender to get that pre-approval, make sure that you talk to them about what kind of funding fits you best. FHA, VA, USDA, or conventional, or there's even more of them out there. And that lender will help you decide which option is best for you. Also, they will help you figure out if there are any special funding programs for you. There's first-time homebuyer programs, there's down payment assistance programs, and there's even programs that will help give you the funding to fix up a fixer-upper. That's the fun part, where you get to actually go look for a home. And of course, there's several ways to find a house. You can go drive the neighborhood. You can look online. You can go to open houses. If you do that and you're represented by an agent, it's a good idea to bring some of your agent's business cards with so you can give them to the agent that'll be at the open house so they know that you're already represented. And your real estate agent should be able to plug all of your needs criteria into the computer and set you on an automatic search so that when a home pops on the market that meets your criteria, it will send you an email so you can go look at it right away. And remember, this house does not have to be perfect. I want you to love it, but it doesn't have to be perfect. In fact, if you are thinking of taking an FHA loan because that's what you can afford, well, maybe look at houses that are a little lower in value because they need some help. They need somebody to come in and love them and put in new kitchen countertops and new carpet. That lower price point that you're willing to settle for may make the difference in your finances that you can go from an FHA loan to a conventional loan. And in today's crazy market with multiple offers, having a conventional loan might just help get your offer accepted. Okay? You found it. It's time to make an offer. If you're using an agent, that agent is going to go and fill out a whole bunch of paperwork, including a pre-approval letter from your lender saying that you are qualified for that much money. You can buy that house, and they are going to present that to the seller. Now, chances are that seller is going to come back with a counter offer, and you and the seller can go back and forth negotiating until you either come to an agreement or one of you decides to quit. And if you don't get the offer accepted the first time, just know it could, especially in this crazy market, it may take a few times before you find a house and your offer gets accepted. 25 years ago, when I bought my first house, I had to try 4 times before somebody accepted my offer. And that wasn't in not nearly as crazy of a market as it is today. When that offer gets accepted, one big thing you need to know about is something called earnest money. That is your skin in the game that tells the sellers that you are serious, because if you just flake out and drop out of the process, they're going to get to keep that money. And that money is about 1% of the purchase price. So on a $400,000 house, that's $4,000. So it's a chunk. And they are going to ask for that money immediately within the first couple of days. And that money is going to get put into a broker's account and you will not see it again, but it will be credited to your down payment at closing. So just make sure that you have those funds in your account so you can write that check right away. The next basic you need to learn about is the inspection. That is the next thing in the process of buying the house, is the inspection. So you will hire an inspector to go look at that house. Depending on where you live in the country, that could be anywhere from $300 to $500, something like that. And that inspector will go into the house and check it out and make sure that there are no major problems. Your agent has probably put an inspection contingency into your offer so that if you do find huge problems, you can back out and still get your earnest money. Now, in the insanity that is today's market, there are some people who are forgoing the whole inspection process in order to win the house, win the bid. Sometimes that's okay. Sometimes that's not okay. If you're looking at a condo or a townhouse where an association takes care of all the big ticket items like the roof and the windows and the siding, that's not so bad. But for a single family home, it's really not a good idea to skip this inspection process. You really want to know that what you're buying is not going to just start draining money out of your pockets from here to eternity. Okay, let's say the house comes through the inspection with flying colors and there's nothing on that inspector's report that raises any red flags. Awesome. At this point, the house is considered pending or in escrow, depending on what part of the country you live in. They could use two different words to explain that process of time where the bank kind of takes over. There's really nothing more for you to do as a buyer except wait for the bank. And they are on a very specific calendar. It takes so many days to do things, usually about 30 days. In that process, they are most likely going to call you asking for different types of documentation, like tax returns or pay stubs or savings account statements. So if your lender does call you, make sure that you call them back. Respond to them as quick as you can to make sure that you don't derail yourself from the timetable that they are on. And while you're sitting there waiting for the lender to do all the things that they need to do, if you need to keep yourself busy, go down below and hit the like button. And if up to this point all has gone well, you will be able to move on to the closing, close on that house, and you will own the house. Awesome. However, especially in today's crazy market, the last home buying basic and one of the most important things that you need to know is that sometimes it just doesn't work out. Your offer doesn't get accepted or your financing falls through. It is not uncommon to have deals fall through and you don't get the house you want. It is important for you to know there's always another house out there. You will find another house. So while it's sad that this was your dream house and you were all excited, take a couple of days to regroup and get back out there because there is a home out there just for you. And the absolute last and final thing that you need to know is that once you've bought that house that you love, don't look back. Ignore the market. Forget it all. Just enjoy the house that you love. If you like this kind of content, feel free to hit the subscribe button. Thanks for watching. See you next time.